Hello, Steve Spangenberg from the Home Based Business Tax Coach, and we're going to talk about what is worse than an inaccurate return. Could there be anything worse? Well, there is. But first, let me tell you, I am a home based business tax expert. I've been doing home based business taxes now for 47 plus years. My first client was my mom's Avon lady. I do taxes for Avon, Mary Kay, Zango, Young Living, Longevity, any kind of home based business, direct sales, all those good things. And I get my clients anywhere from $2,000 to $5,000 back on their tax returns every single year. And the proof is in the pudding. I've recovered way more than $200,000 from my clients over that time from looking at back tax returns. So here we go. What is worse than my nose itches, I'm going to get money? What is worse than an inaccurate tax return? You won't have to wait till the end of the video to find out. You're going to find out right now. It's an incomplete tax return. That's right, an incomplete. Along with filing late, the IRS gets a little crappy. Can you say that on YouTube? I'm not looking at anybody. I'm just pretending I have a big staff here. But the IRS gets crappy when you are sloppy, when you don't fill in all the boxes, when they don't tick the box. You got to remember the IRS is a Charlie checker. They used to, when I worked for CPA firms, they used to call me Charlie Checker, because we would go in and audit, we'd check. That's the way the IRS's people are. They check. They're Charlie checkers. They like to tick the box. If a box is not ticked, then that goes in their computer system and it can trigger anything really. It can, you could look at, they put out reports all the time. They look at standard deviations versus your deviation from the norm and all kind of stuff. And it's sloppy. When you don't have a complete tax return, when you miss boxes, what that does is signals to the IRS that you don't have your act together. And who is easier to audit? A person who has everything tick, 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 everything lined up, or somebody who's very disorganized, who is very sloppy? It's the person who's very sloppy. That's an easy target. I keep adjusting my glasses and scratching my head. It was just like when I was in church, when I was reading the scriptures, I would always go like this. So that's just a little aside. What we're going to do is we're going to look at the Schedule C. I'm going to go over this with you because this is important. And even if you get your taxes done by somebody else, it's important for you to look at this. Because guess what? If you get audited, they don't care. That's not their butt. They'll charge you to go to the audit with you. I don't believe in that. I sell audit protection, for a lousy $50. I go for you. I make sure you stay off the audit radar. That's the key. That's the key thing. Now let me just bring up my, and it's going to show up on it's going to show up on the screen here. That's my hint when I edit this video to put the Schedule C up on there. So let's have a look at this. This is, oh, for God's sake. Oh, yeah, I did that. I messed up again. I forgot to take that number off. That's okay. Here we go. This is the Schedule C. This is the important part, the top part. This is where you don't get sloppy. What you do is A, principal, business, or profession. And it's not the company that you work for or that supplies your product. It's not Mary Kay. It's not Young Living. It's not Tastefully Simple. When I do taxes for those type of people, I put retail sales, various products, or retail sales, cosmetics. Okay? You don't put the name of your supplier in there. On this right here below B, Select type of business. I don't usually just let that blank, because this code below is a code that is what's the most important. Now, what I see over the years, I've been doing this for over 47 years. I've seen a lot. Have I seen everything? Probably not, but I've seen a lot. And what happens is tax preparers get lazy and they put 999999 in there. That says to the IRS that you're lazy. It doesn't say that your preparer's lazy. It says you're lazy. It's your tax return. Don't put 99999 in there. Go find the code, the proper code. It's in the instructions online on the irs.gov website. You can go to the instructions for Schedule C. And it's 3 pages of codes. Pick your code. Pick the most appropriate code. Now, a lot of people and sole proprietors, they just use their social security number up there. Or if you're an LLC, you put your business name in there, your EIN number in there. Fill in your address, 100%. Fill it all in. Accounting method. 9 times out of 10, you'll be on the cash method of accounting. Do you materially participate in the operations? Absolutely, yes. If you let line G empty, the IRS will fill it in for you as no, and then you can't deduct any losses on your business. Simple, simple, simple. They'll just adjust your return for you. Very important that you materially participated in the operation of this business. If you started your business in 2025 or in the year that you're filing, hit that box. The reason why you want to hit that box is if it's your first year in business, they give you a little bit more latitude with losses. Okay? So if you have a big loss, they'll give you a little bit of they'll see how the box is checked. Okay, big loss. Okay, move on. Once again, very important. Line I is an indigo. Did you make any payments that would require you to file a 1099? Fill it in. And then even in J, even if it's no, just put NA. Okay? And if this business processed a farm commodity, check here. I never had to check that there. This is very important, people. This is your business. This shows the IRS that you got your act together. You know what you're doing. You're in business. Okay? You're in business. You're just not doing this on the side. You're in business. Now, the next form that we're going to look at is the 8829, and that is it's called the expenses for the business use of your home. All right. Now, completion means completion. It means you fill in the boxes. Now, when people use part of their home for an office, an area, if they have mortgage interest, you can put it in here. Real estate taxes, this is the total amount. This is the total amount. It'll be your deduction will be based on the percentage that you use for your home. Fill these 2 in if you have mortgage interest, if you have real estate taxes. Come down here to line 18, insurance. That includes your renter's insurance or your homeowner's insurance or your mortgage insurance. All 3 of those count on that line. Fill it in. If you rent or you own, you're going to have insurance. Put it in there. Your rent, put it in there. Repairs and maintenance. Now, this is the big thing that over the years, when I look at people's returns that I fix from prior accountants, who I don't know these accountants, so I have nothing against them. I just think that they're playing with people's money, because 99.999% of the time, even if they did compute a home office, which most of them don't because they're scared, But even if they did, they never fill in this repairs and maintenance. And why is that? You know why? Because it's work. It's work. It hurts. It hurts to ask people questions. It hurts to say, hey, have you had any major repairs to your house? Did you seal your driveway? Did you buy a lawnmower? Did you buy a snow blower? Did you put carpet in your house? And that counts for the whole house because you're taking a percentage of it. So that you might have carpeted your living room, but that counts because you're taking a percentage of it. It's work for people. And I don't mind doing the work because it all counts. And people buy cleaning supplies, they buy light bulbs, they buy tools, hammers, they buy nails, they buy screws, they buy all they put a cabinet in the garage, or they buy a refrigerator, they buy a heater. All these things can be put in repairs and maintenance. And if I'm looking at a tax return and I see that line blank, that just says to me someone's sloppy. They don't care. They don't care. There's not a person on this earth that doesn't have a repair and maintenance to their home, even if they rent. I rent. I got plenty of repairs and maintenance. I put $3,100 worth of screens in my house, and I rent. Boom, $3,100. Boom. Utilities, fill it in. Okay, those are the 5 lines. Insurance, or 6 lines: insurance, rent, repairs and maintenance, utilities, mortgage interest, and real estate taxes. So there are the lines that you can fill out. You should fill out. Now, that's for home-based business. And, be complete. Fill everything out. So important, because you want to look meticulous to the IRS. Okay, even in the Schedule C and other expenses, I have people itemize even the smallest expenses, like $10 for a software, or $50 for postage, because that's a signal to the IRS that this person is willing to be that detailed in his or her their record keeping, that they're that detailed. So I know this may sound boring, but what's not boring is going through an IRS audit for silly things like an incomplete tax return. So if you got something out of this, if you learned something, if you liked it, like and subscribe to like the video, subscribe to the channel. And if you want to invest $7 in yourself and find out everything in one space, and join my school called Create My Economy. Goes over taxes, goes over how to maximize your business. Go to createmyeconomy.com. Invest $7 a month in your tax education and your business education. Have a big business, and don't give all your money to the IRS. This is Steve Spangenberg, home-based business tax coach. You make it a great day.